Hi there and welcome to yet another episode of Who Moved the Market. I'm your host Surabhi Upadhyay and joining me today in the studios are Sonal Bhutra as well as Vivek Iyer. Guys, hi and thank you for dropping in. Now the reason I have the two of these with me in the studio is because we're going to discuss a very interesting corporate development. The news came in just after market hours on Tuesday and it deals with Tata Motors. No, we're not talking about just the earnings, which are fine, which were very good. What we're talking about is Tata Motors deciding to scrap or basically cancel their DVR shares, differential voting right shares. So the idea of the next 10 minutes of this conversation is to tell you why the company has done it, whom does it impact, and as a shareholder, what are the things that you can perhaps keep in mind as some interesting trades play out today. So guys, let's hit the ground running. We were seeing the quick reaction in the DVR share price today itself. Vivek, which is already up 12-13%. So let's start with the basics and tell our viewers what the company has done. So basically, DVRs are cancelled and now you get ordinary shares in exchange, correct?
Absolutely. So yesterday, along with the quarterly results that Tata Motors gave, Q1 results, very interesting development, something that markets were anticipating for the past couple of quarters. They were hoping that, there will be some development as far as the DVR shares were concerned. So yesterday, they've gone ahead and simplified the entire holding as far as Tata Motors shareholders is concerned. So for every 10 shares of Tata Motors DVR that you hold, DVR is the differential voting right. So you do not have the same voting rights as a Tata Motors singular or original shareholder. So for every 10 shares of Tata Motors DVR, you get 7 shares of Tata Motors. Now this merger ratio, looking at the close of yesterday, it is skewed in favor of Tata Motors DVR, which would explain the kind of share price open that we saw in the market today.
Since morning we've been getting so much of commentary around this, and I think the most clear answer as to why would the company do that is simple, that there was this massive discount between this differential voting right share and the actual share, right? I think in some cases as high as 40%. And let's just explain to people as well the whole concept of DVRs, right? Basically, it's the same share, you own a part of the same company, but you have limited voting rights.
Yes.
And in some cases, actually, maybe even higher dividend, right?
Yes, so in the case of Tata Motors DVR, today we had Jake on our channel. So he's actually been a shareholder in the DVR for quite some time. And he actually mentioned that they've actually been receiving higher dividend in the DVR. Now, the scenario is that worldwide, this is a common phenomenon where actually there are DVR shares or Class A shares with limited shareholding rights. But number one, the kind of discount that Tata Motors DVR was trading at compared to the underlying, which is a Tata Motors ordinary share, was a lot higher than how it trades globally. So globally, typically examples are like, it's a very minor discount in some cases at a premium, but nowhere as high as 43%, which is yesterday's close. So this trend over the last many years has been very high as far as Tata Motors is concerned. And that is one reason to actually go ahead and make this move, you extinguish these shares and you give them Tata Motors shares.
Okay, so let's go over the discount because just before the announcement came in, the discount, or basically the price gap, to be very, very simple, between the ordinary share and the DVR share was as high as 40%.
Yeah.
Now we have this new swap ratio, like you explained.
Yeah.
For every 10 shares of the DVR, you get 7 shares, the ordinary shares.
Ordinary shares. So let's go through the math. So yesterday's close, Tata Motors closed at 639.5. And Tata Motors DVR closed at 373.1, which indicates a 43% discount of Tata Motors DVR to Tata Motors ordinary share.
Okay.
So 10 shares of DVR is close to 3,730. 7 shares of Tata Motors is close to 4,476. So what's actually happening is that the spread, the difference between both the prices was in excess of 20%. So which is why we keep saying that Tata Motors DVR shareholders are at an advantage, because as per the merger ratio of 10:7, the shares are now given a value of a 20% premium compared to yesterday's closing, which explains the move in DVR today. Now, how did the valuation advisors ascribe a value to Tata Motors DVR? Because what they've done is they've not looked at how Tata Motors DVR is trading. They've independently arrived at a valuation for the Tata Motors DVR share. So number one, they've taken a couple of factors into consideration. They've looked at the historical discount at which it has been trading, and they believe that it's a little unfair.
Okay.
So, number two, what's actually happened is that it has lower voting rights, so there will be a discount. So on the basis of that, they've given a 30% discount of Tata Motors ordinary share yesterday's close, which is 639.5, and what will be the actual value, which is 447.
Okay, how have we come to 447?
Which is the price of 7 shares of Tata Motors at the end of yesterday's close.
Okay.
So 447 would be the actual price. So which is why you have actually received a 30% discount to the ordinary share, but a premium to yesterday's close.
Yesterday's closing
as far as
Okay. Now, before we carry on and talk about a lot of the other trading opportunities and the other aspects of this, we need to understand tax as well, Sonal. Now, there is no cash being paid out by the company. However, the company is giving you ordinary shares in exchange for these DVR shares. So is there a tax implication, first of all?
Oh yes, there will be a tax implication. The income will be divided into deemed dividend and also capital gain. So usually, as you said, there is no cash outgo that we are seeing here. But when there is one, as per the income tax rules, it will be considered as deemed dividend in the hands of the shareholders, or capital gains, because they are going to be getting more cash than what they had invested earlier.
The premium that Vivek is talking
Correct, the premium
about,
that he's talking about. But generally here, it is a kind, they're getting something back in kind. That is the shares of Tata Motors. So one would say that, okay, there is no cash outgo. Will there be a dividend? Yes, there will be. Now, how will we calculate that? Now, as per the income tax rules, there is a change in the nature of capital asset. From DVR, it becomes Tata Motors shares. And capital gains in that case will be levied. So that's about the capital gains part. But how will you calculate deemed dividend? Because again, there is no amount, so to say. So it is dependent on whatever the accumulated profits in the books of Tata Motors DVR are. That is the amount that will be paid out to the shareholders. That is what is considered as the deemed dividend upon the number of shares. So say if you have like 10 shares, then the total amount you will get as per your pro rata basis, you will get around it for 10 shares. So that is the deemed dividend on which you have the normal taxes that you have as per the Income Tax Act. But what about the capital gains tax? Because you need a consideration amount for that. You need to know what the cost of acquisition there is. So they say that you can give out dividend only up to the amount you have accumulated profits. So suppose you have to pay out 200 crore rupees. That's the consideration. So deemed dividend will be only 100 crore rupees. That's the accumulated profit. The next 100 crore rupees, that will be considered as your capital gains. And that is how it will be taxed. So how will they get the fair market value or the sale consideration? It will be the price that you have for Tata Motors, because that's the asset that you're getting in lieu of Tata Motors DVR. So that will be the fair market value for consideration of capital gains tax. What will the cost of acquisition be? It will be the index cost, if it is a long-term capital gain, of Tata Motors DVR. Suppose you bought like 10 years back, but there will be some indexation. So say if the value right now for you for Tata Motors shares is 600 rupees and the cost of acquisition for Tata Motors DVR as per indexation is around 400 rupees, then 200 rupees will be your capital gains. And that is what the tax will look like.
So the tax is going to be on this capital gain.
Correct.
And what about the deemed dividend that you
Okay, right. It was a little confusing, but let me clarify it for you. So suppose you have 100 crores in terms of reserves in your books right now. And that is the amount that will be considered as deemed dividend. That is what will be given to the shareholders in case it's only a cancellation, right? So it's deemed. It is not actually a cash outgo, but in case you're considering that there is something that you're getting in kind, so that is the amount that you'll consider for deemed dividend. Anything over and above will be considered as capital gains
got it.
tax.
So in case this was not an exchange of shares, in case you were actually buying back or cancelling these stocks, these DVR shares, and giving out cash. So on that basis is how they're coming.
So again, it's deemed and there is no cash outgo here, of course. So in case, but they have done it via trust. So we do need some more clarity here, whether there will be some cash outgo in terms of net amount that they have to pay to DVR shareholders. In case they do, there'll be a deemed dividend tax on that. And over and above, whatever they are getting in terms of the asset, that is Tata Motors share, they will pay capital gains tax on that.
So basically, whoever is a Tata Motors DVR shareholder needs to be aware that there's going to be some tax instance. And you need to watch out for more clarity from the company.
Exactly. So if it's less than 5,000 rupees, there, of course, it won't be taxable. More than that, 10% TDS will be deducted by the company itself. And capital gains will be, of course, according to your income tax slabs and how it's calculated. And for NRI shareholders, it's 20% TDS that will be deducted irrespective of the amount of dividend that is paid. The amount that is paid out.
Okay. So there's a tax implication that one has to be aware of. But irrespective of tax or no tax, the market's telling you that people have been trying to make the most of this opportunity, right? So explain to us why the surge on the stock today. What's the trade that seems to be playing out on the DVR?
So any situation like this or any development like this, falls under the category of what quant analysts like to call as a special
situations,
which provides an opportunity for arbitrageurs to come in and play. So an arbitrage trade is a wonderful trade because the risk is actually very minimal because you're actually playing with the same underlying and you're doing both a long as well as a short.
Yeah.
So in this particular case, given the fact that, and we are talking about at the close of yesterday's trading session. So as per that, clearly DVR shares are being valued at a premium and Tata Motors shares are actually being valued at a slight discount. So the simple trade is, in cash, you buy the Tata Motors DVR and Tata Motors, you can either sell in cash in case you have the holding of the share, or you can actually sell the futures. And till the time that this particular merger or this particular special situation comes to fruition, you can actually keep rolling over your positions. So you buy the DVR, you sell the futures, or you sell the cash in cash if you have the holding of Tata Motors shares. Because at this point of time, a Tata Motors shares is worth less compared to a Tata Motors DVR share till the time this particular merger comes into fruition. And this is, this spread that keeps happening is what you have to keep tracking, and that is what arbitrageurs, going into this particular trade will try and capitalize on.
Sure, and we can see that. I mean, today itself, the spread has narrowed because of the DVR share itself has moved up by 12-13%.
One more thing, that we should keep in mind. At the end of all of this, the total number of shares of Tata Motors or the share capital reduces by 4.2%. So that actually, in terms of valuation, if you look at it, it actually reduces the total number of shares, so it increases the EPS. So even to maintain the same price to equity, it's actually a win-win even for Tata Motors because there is
capital
that
base.
Yes, and there is that particular premium that market can continue to ascribe to it.
Okay, and I mean, anyway, Tata Motors has come out with great numbers this time around on the fundamentals, so the market probably is quite happy with that. Just in terms of timelines, Vivek, this also has to go through several regulatory approvals and steps, right? So what are we looking at?
As in case of all other mergers, acquisitions, special situations, SEBI, NOD has to come in, shareholders as well as creditors, the NCLT, these are the key ones that we talk about. Expect a timeline of 12 to 15 months as per people who track these situations very closely.
Okay, just adding on to that, because we are saying 12 to 15 months is the timeline that we are looking at. So tax will be levied only once it is cancelled. So maybe right now the price is around 600 rupees. If Tata Motors share price falls then, say to 400, 500, just assuming, then your the consideration on which you will be calculating capital gains tax will come down. It is a possibility that there will be losses as well. You never know, right? So it all depends on when you actually get those shares cancelled and get the new ones. That's when tax will be levied. So it's important to know it's not right now.
And the tax calculation is fluid.
Yeah, so it has to, of course, it depends on when those shares are cancelled.
When you actually get the shares and what's the prevailing price of the underlying share at that point in time. Got that. Okay, so still some moving parts to this story. But thanks to both of you for explaining this to us. Slightly complex corporate development, but I think now we have a fair idea around it. Well, okay, with that, we are out of time on this edition of Who Moved the Market. Hope you found this conversation helpful. Keep sending us your feedback. We'll see you with another theme tomorrow.